Good morning. Welcome to Stock Market Today. It's Tuesday, May 19th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities finished higher in Monday's trading in a rally that was led by small caps and the cyclical sectors of the market. Treasuries were weaker with the curve steepening. The dollar was stronger against the yen, but weaker versus the euro and sterling. Gold finished down 1.2%. Crude oil settled up 7.2%, though off the best levels of the day. Outperforming sectors, it was really your beaten down reflation type sectors, energy, industrials, and financials, while healthcare, staples, and comm services lagged. All sectors did close higher on the day. S&P futures, as we get to the desk this morning, are giving a little bit back, down 30 basis points in early trade. Asian markets were higher overnight, led by South Korea and Hong Kong. European markets are trading lower, however. Treasuries are stronger across the curve. The dollar is better on the yen cross, but lagging the euro and sterling. Gold is up 20 basis points, and WTI crude is up a like amount, 20 basis points. So there it is, folks, knocking on the breakout's door. All right, that 29.50 level that we've been highlighting is now in play. 200-day moving average just overhead at 29.98. That's the breakout that the bulls want to see. And if it is accompanied by the type of action that we saw yesterday, I think that that would be encouraging. To me, that would open the door to a test of the February 19th highs. It's 3 months ago that we were at the highs. Happy 1 quarter anniversary of the S&P 500 highs. But the type of action that we saw yesterday was what you would be looking for as an equity bull, because it signaled broader participation, at least for the day, right? Tech was up, but energy, industrials, financials, those cyclical areas of the market outperformed yesterday. Now, one day does not a trend make, and we're going to look at the banks a little bit later. But should that gain traction in conjunction with a break through this resistance zone, you have to think about the highs. Should this just be a flash in the pan? Well, then we're back in the range and you know what to do. Support is in the 2750 to 2800 area. And then down below that, you have to think about the retracements. We're closer to oversold than we are to overbought. Chaikin money flow still dips bearish. So from an indicator standpoint, not much has changed. So the real question is this a counter trend rally? And do we head lower? Or do we get a breakout? And even if we got a breakout, you know, your next stop is kind of 3100, 3110. But if that's happening with broader participation, that would be really encouraging to me. Let's hit our market in a minute now. What are we looking about? What are we talking about, rather, in the note today? And, you know, bullet point number one kind of says it all. Big rally that was not led by the NASDAQ for a change. Materials moved to a leading spot in the short term. That is, if you could see that in the relative rotation graphs, whether you use them here on StockCharts or if you see them in my note, the relative rotation graphs, which I use to get short-term indications that could impact longer-term trends. It's a really interesting dynamic as these cyclical groups have stepped up. But again, that's very short-term in nature. Energy continued to improve. Is it simply counter-trend? We'll have to take a look. Small cap breakout to me would send a broadening message. We've talked a lot about the small caps. If they're able to break out here, that would send further broadening signals to the market. Futures point to a lower open today, as I said. Major indices from a power bar perspective see a bit of improvement, as you would expect on a day where the Dow and S&P are up over 3%. And small caps yank higher, up 6%. That is a violent move to the upside, and it sees its power bar ratio swing back to positive, 386 to 327. The Dow still negative, though improved. S&P still negative, though improved. NASDAQ better than 2-to-1 bulls to bears, even on an underperforming day. Bonds down ticked as there was no flight to safety yesterday. energy, your leading sector. So again, one day does not a trend make. And the question is this simply short covering? Now, if you look at short interest in the market, it's still very elevated. So the question is it short covering and just getting back to square, or is there a real rally behind this? Only time will tell, but a breakout through the key levels that I've highlighted with that broadening participation would be a key factor. Stock of the day, Eastman Chemical. Speaking of materials, I think the materials are the best looking of the reflation. So Eastman Chemicals looks interesting to me. It's a bullish name, strong trend, weak industry group, still chemicals, but right, we're seeing a bit of a personality change. Notice how the intensity of underperformance has dampened, and now we are an outperformer, coinciding with a rating change. So this is the start of a personality change. We'd love to see a little bit more juice out of money flow, but we have retaken the rising long-term trend line. So I think that if you want to begin to allocate to what could potentially be rotation, right? We don't know for sure, which is why you manage risk. To me, there's a signal here that Eastman Chemical is compelling as a bullish idea. As a matter of fact, I highlighted it in not one, but two of my notes today. On Tuesdays, I published 2 notes. I'm not saying that it has to work out. I'm saying that there's a nice setup here. And if you manage your risk, there's a compelling risk reward, right? Clearly, just from a technical standpoint, back down under 55, you're wrong. So, call it 7 points of downside, but you could be looking at, the top end of the range, 80, 82, right? 20 points of upside. That's an interesting risk reward scenario for me. So I think Eastman looks compelling. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days. Materials at the top of the list. There you go. I mean, I think this is the best looking one from a relative turning perspective with the most potential. Discretionary energy utilities, top 4. Industrials, fins, comps, staples, middle of the road. Tech, healthcare, REITs, bottom of the list. REITs being the only one that are lower. So healthcare, actually, we're going to take a look at a little bit later on in the show as well, because the relative stalling there, which I started to call out last week, if you recall, still has my attention. And negative divergences have my attention. Waiting to be confirmed, not quite there yet, but something that I'll be paying attention to very closely. Our industry in focus today, regional bank services, has been, it's been a disaster. And a couple of weeks ago, we were talking about how bad the banks were. And then about a week ago, everybody was talking about how bad the banks were. And what did the banks do once everybody started talking about them? Well, they rallied. But, trend perspective, this is still a mess. Underperforming by nearly 35% over the past 6 months. Power bar ratio, an utter disaster. 39 bears for 1 bull. Currently ranked number 19 of 21 subsectors. But at least it's not in the number 21 slot anymore, as it's moved up 2 slots over the past week. Commerce Bank, First Financial, and Community Bank, all very bearish names that we want to avoid here. And if we look at KBE, the ETF that tracks the group, you can see the bearish rating. You can see the horrendous ratio. And you can kind of see the weak trend here. It falls off a cliff, consolidating, but I'm not impressed. Underperforming, bearish rating. So if this was a stock, we would say it's a bearish stock, underperforming, bearish money flow. It's just oversold in the near term. I think you want to use rallies to lighten up if you're long bank stocks, unless there are indications that we're going to break topside, right? Again, part of the reflation trade. If that reflation trade, if that cyclical trade is coming back, you'd expect to see the banks breaking out. So far, they're not there yet, but it's something you want to watch, right? We keep an eye. Remember a couple of weeks ago when I started talking about energy, right? That stopped being a layup short, right? And that remains the case. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers. I think for the most part, the gainers board has a theme in common. And that would be economic reopening. United Airlines up 21%, nothing company specific, but the positive phase 1 data out of Moderna gave hope for a vaccine, which could potentially speed up economic reopening. I'm not a scientist. I'm not going to comment other than to say it was phase 1 data. Obviously a step in the right direction. Obviously something we want to see. But phase 1 data is just that, phase 1. Let me see phase 2 data. And obviously then you need phase 3/approval. Expedia, same story. It did catch a downgrade today. Norwegian Cruise Line, same story. Did catch a downgrade. No, did not catch a downgrade. Part of the reopening trade. L Brands reopening, ADS, nothing company specific there. Loser side of the board, well, the defensives, Campbell Soup and Clorox, right? If we're going to reopen, you can stop buying the cans of Campbell's and the gallons of Clorox bleach, and we can get on with our lives. I guess, simplistic thinking here. Citrix is part of the large cap leadership group that gave some back today. Amgen, nothing company specific. Regeneron, negative derivative call following some comments about a drug from one of their competitors. Regeneron down 2.85% on that news. Let's take a look at it now. I said we'd look at materials. That's the best looking reflation sector to me. XLB, very similar to the S&P 500 here in the zone. Notice the RSI moving higher. Right, holding bullish ranges so far. Hasn't really gotten to an overspot level yet, and that's one of the most interesting dynamics to me. But you can see a bit of stabilization on a relative basis against the S&P 500. So the materials sector kind of looks compelling to me as a potential reflation idea. It's a low conviction idea, but it's an idea, and I want to try to be aware of these trends as early as possible. Hence, pointing out a name like Eastman Chemical. Eastman Kodak, could you imagine? Eastman Chemical here today. Now, we're clearly not out of the woods, right? But if there are shifts underway, I think that's one that could be interesting. Energy improves, right? Very similar dynamic. Take a look at the XLE here. And here I gave you the fibs. XLE potential upside to the 50% to $41. Beyond that, $45. Just to give you a sense, right? The S&P 500 is playing with its 62% retracement level. A little shift here in the RSI after becoming deeply oversold, right? So again, not out of the woods, but the types of things you want to start paying attention to, right? If the S&P 500 breaks out and these groups are participating, that's broadening. That's breadth broadening. That's broadening participation in the rally. We had something we haven't seen up until recently. So to me, to have confidence that a rally is going to gain traction, I need to see broadening. And if I do see broadening, to me, that opens the door to the highs. It's pretty simple. I've laid out the roadmap in my note. I've laid out the roadmap on this show pretty much every day for the past 2 weeks, right? And while I wish I could say, yes, we're going to the highs, I can't. So I need to play it out probabilistically in a series of if-then scenarios. If we break 3,000, you have to think about 3110. And should that give way, especially with broadening participation, the highs are in play. That's how I frame it up. Broadening participation would constitute these two groups that we just looked at, materials and energy, along with the financials and industrials getting in gear. And this has caught my attention as well. This consolidation, I pointed it out last week in healthcare. The consolidation near the highs after a negative divergence. Now, the key is for the RSI of the ratio to hold this bullish range. But a breakdown here that confirms this divergence would signal a potential shift or rotation in the leadership, which is something we want to pay attention to because obviously we have been uber bulls on healthcare and we've been right. That's going to wrap us up for today. I will be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.